Hi, this is Stephen here from Navigator, and this is your daily options and futures trades update. So we're lining up new trades on the S&P 500. I will talk about those in a moment. First, I just want to talk about existing trades we have on. First trade is the SPY 420 or 620 short put that expires on Friday. Nothing to do with that trade, folks. That trade will expire in full profit. So there's nothing to do there with that. The other trade we currently have on, and we were very smart at the time, was selling the put options on the December crude oil futures. So just to explain very quickly what we did again, it was around the 2nd of October, I think, in and around this time here. Rather than going long on the crude oil futures, what we decided to do was sell a put option at the $55 strike, which ultimately what we did was insured somebody else's futures contract. And by doing that, in essence, what we're saying is we're not prepared to go long on crude oil now, okay? But if it did fall to 55, we would be. So we got paid an insurance policy for that. And as you can see, since then, crude oil kind of went up, but it came back down here again. And it looks like it might test that $55 level. So those put options that we wrote was a smart idea rather than going long outright. And that's the benefit of writing put. It gives you more outs and gives you leeway for things to go wrong against you. So we're not going to do anything with that trade right now. The reaction in crude oil, again, is a reaction to the kind of the US-China kind of tit-for-tat trade war that's going on at the moment. My own view is, and this ties in nicely back to the trade I'm going to discuss now, when all is said and done, it's in nobody's interest for a trade war to escalate between the two countries. So with that in mind, my view is with the S&P 500, and just before I go on and talk about the trade is, I think it's overcooked at the moment. It needs a bit of a correction. And this is healthy for it to happen. How far can it correct? I think it could drop all the way to the 200-day moving average. It wouldn't surprise me. And people might go, oh, holy God, that's a terrible drop. It's 9%, but look at the move it's made. It's given back some of the move. And to me, that would be healthy. And I think that would bring in fresh investment into the market. Now, that's on the assumption that things get resolved at some point in time, which I think they will do. So far, that's what's happened in every single case. So the trade we're looking at, because we're getting a little bit, we feel that there might be a downward bias. We don't want to go outright long on the S&P 500. So what we want to do again is insure somebody else's shares. So if you look at SPY, that's the exchange traded fund that tracks the S&P 500. You can see that that's down 1% in the pre-market. So what we're going to do is a repeat of the trade we just did. We're going to write a put option at the 620 strike. So that's for people who want to get assigned 100 shares of SPY or multiples of 100 shares of SPY, writing a put option, I would suggest the 620 strike because it gives plenty of leeway for the market to fall and your probability of profit will be up, okay? I'm going to show you a less costly way now in a second using futures markets on how to do this as well. But just for now, let's focus in on SPY. So we're going to hop in here. We're going to click on trade. We're going to click on option chains and we're going to type in SPY. Now, before I go on, this is pre-market activity. The market hasn't opened yet. And for that reason, these prices that you're going to see right now on these option premiums are actually yesterday's closing. And we feel that these are going to come up, the premiums are going to come up when the market opens because it's set to open down. So yesterday, for example, by selling the 620 put, you would have got in $309 per contract. So that's basically, that goes straight into your account as cash, right? And basically you're on the hook then to buy 100 shares of SPY for every contract that you've sold at the 620 strike. You can see SPY is trading at 657 in the pre-market, okay? And if you look here, and we pretended to place that trade, you can see here, we have 95% probability of profit. So it's a high potential of profit. Why? As I said, SPY can go up, it can go sideways, and it can drop. As long as it doesn't drop more than about 8%, we're going to make a profit on this trade between now and November the 14th. That's why the probability is so high. If you think about it, if you bought the shares today, you've only a 50-50 chance of making a profit. It has a 50% chance of going up and a 50% chance of going down. With this trade here, we've got three outs. If shares go up, if shares go sideways, if shares go down, as long as they don't go down too much. So you can see here with this trade, our break even is $616.85. So SPY can fall all the way from 656 down to 616 and we don't lose. So that's why the probability is so high. And having studied this market for the last 50 years and the returns, on average, 90% of the time, SPY trades within plus or minus 5% every 4 weeks. So it's very unusual to operate outside of that 5% move. We've allowed 8%, but it can happen. So we're not saying it's not going to happen. We can talk about how we'd manage that if it did happen. So that's one trade we're going to line up. We reckon if the market did open up today lower the way it should, this could actually jump up to about $5. So you'd be getting about $500 a contract. So that's one trade. For those of you who don't fancy being on the hook for 62,000, which is ultimately what you'd be paying out to buy a contract or to buy 100 shares of SPY, you could trade the futures. These are cash settled, okay? So if you type in MES, these are micro futures. So they're a micro version of the main futures contract, and they're worth about $30,000 each at the strikes we're going to pick. So again, you could go to the November 14th expiry, and you could go down to around the 6,200 level. I'll explain what these are. So what you're looking at here is the November 14th option expiry for the December futures contract. What's the futures contract? The futures contract is the right, or not the right, this is like an expiry in December for what the S&P 500 is. So let's say you wanted to lock in maybe the potential for the S&P 500 to go up or down between now and December. You will either buy the future if you think it's going to go up, or you would sell the future if you think it's going to go down. And these are cash settled instruments. So in other words, you don't get assigned anything on these. You actually just win or lose. It's as simple as that in cash. So what we would do here is sell the $6,200 put. This is about $32,000 a contract. So slightly less. You can see here our break even is 615.7. Probability is about 93% on this particular trade. So that's another trade that you could do if you didn't fancy it. Now, the nice thing about this is you can actually trade this 24/5 between Sunday night and Friday night, whereas SPY is through regular market hours. Okay, so because this is an option on a future, this actually trades now. We could put this trade on right now. So I just wanted everybody will be different in what they want to do. We just wanted to highlight that for you. So what we're going to do is let you know when we place the trade. We want to just see how this market is going to shape up. I can see the way the futures are getting a little bit worse there now as we tick on. I just want to see how President Trump reacts to what China did overnight. And see, does this get any more aggressive before we actually place the trade? But that is certainly the strikes we're going to pick. They're the trades we're looking at. We've been waiting for a long time to try and get onto the S&P 500. I want to see a good shakeout. I'd love to see 10% off this market, and selling the put options is the way to go. We will notify you. We will record the trade when we place the trade, but we just wanted to give you the heads up. Okay, this is Stephen with an update from Share Navigator on our options and futures trades for today, which is October the 15th, I believe, 14th. Thanks and bye for now.